Today, we're diving into a massive story out of Scunthorpe, England, where the UK government just took over the British steel plant. Yep, a Chinese-owned facility. This isn't just about steel. It's a bold move signaling a major pushback against Chinese investment in critical infrastructure. From financial losses to diplomatic drama, this saga has it all. So, let's unpack what's going on, why it matters, and what's next. Stick around, because this is a game changer. First up, let's talk about the massive blow to China's Jingye Group. Back in 2020, Jingye bought British steel for $70 million, hoping to make waves in the UK's steel industry. But things didn't go as planned. The Scunthorpe plant was bleeding cash, about 700,000 a day. Jingye's big idea? Reject a $500 million government aid package and shut down the blast furnaces to cut losses. Big mistake. The UK Parliament wasn't having it. They held a rare emergency session, passed legislation, and effectively yanked control from Jingye. Sure, Jingye still owns the company on paper, but they've lost all decision-making power. This is basically expropriation without the label. Financially, it's a disaster for Jingye. Their initial investment is toast, future profits are gone, and they can't stop the daily losses. But it's not just about money. This is a reputational gut punch for Chinese firms. UK officials called Jingye out, accusing them of bad faith negotiations and even neglecting the plant. Those are fighting words, and they're now public. It paints Chinese investors as potentially playing geopolitical games or ignoring local interests. That kind of distrust is toxic. Companies like Jingye might struggle to win bids in Europe or North America, where governments are already skeptical. UK businesses could steer clear of Chinese capital if there's a chance of this kind of drama. For Chinese firms, this could mean writing off investments or bailing on projects at a loss if politics turn sour, just like here. Now let's zoom out to what this means for China's investment game plan in Europe. The UK just drew a line in the sand. Critical sectors like steel, energy, telecoms, maybe even nuclear, now have a high trust bar for foreign investors, especially those tied to Beijing. Chinese companies are facing tougher scrutiny, stricter conditions, or flat-out bans when they try to buy into Europe's key infrastructure. This could force China to rethink its strategy. The UK says there's still room for Chinese cash in less sensitive areas like cars, biotech, or agriculture. Think electric vehicle deals or health ventures. Beijing might pivot there or focus on countries with looser rules, maybe in developing regions or parts of Europe. But the UK's stance could ripple across the EU, where many nations are already tightening the screws on Chinese deals. The message is clear. Investments that look like destructive behavior won't fly. To get around this, Chinese firms might take smaller stakes, team up with local companies, or get better at transparency to prove they're in it for business, not politics. Still, the era of China snapping up European assets without pushback? That's fading fast. This Jingye mess will be a cautionary tale in Beijing, especially for state-owned firms eyeing Western industries that could turn into political hot potatoes. This steel clash is also stirring up trouble in UK-China relations. Beijing's not happy, warning the UK not to politicize this or scare off Chinese investors. China's foreign ministry says the UK should have handled this through talks, not by treating Chinese firms like threats. From their view, this is the UK over-securitizing a business deal, and it could chill Chinese investment across the board. What could have been a quiet business issue is now a diplomatic firestorm. Prime Minister Keir Starmer's government, which wanted to play nice with China, is now in a tougher spot. This move prioritizes economic security over cozying up to Beijing, feeding into an economic Cold War vibe, where the UK, like the US, is ready to ditch some Chinese trade to protect key industries. The result? Trust between London and Beijing is crumbling. We might see less Chinese business in the UK, and China could get prickly about British exports or companies in return. Meanwhile, the UK is doubling down on ties with allies like India to cushion the fallout, shifting its economic focus toward democratic partners. Chinese firms will need to rebuild credibility to stay in the UK's good graces, while both sides navigate this tense new reality. So, what's the big takeaway? This takeover is a turning point. On one side, it's a huge win for countries like India. Indian firms like Tata Steel are stepping up, boosting exports, and strengthening ties with the UK through investment and tech partnerships. With a UK-India free trade deal in the works, this could kick off a new era of cooperation. India's reliability here will earn major points in diplomatic circles, making it a go-to partner for sensitive sectors. On the flip side, Chinese firms are taking a hit. Jingye's loss highlights the risks of investing in markets wary of Beijing's influence. This isn't just about one company, it's a warning shot to China's broader ambitions in Europe, especially in critical industries. Looking ahead, the UK will likely keep a tight leash on Chinese investments in strategic sectors, and other countries might follow, balancing openness with security. Britain will lean harder on partners like India and local investors to rebuild its industry without the baggage of Chinese capital. India's challenge is to keep delivering high-quality supply and trust. China's challenge is to fix its reputation and adapt, maybe through diplomacy or focusing on less controversial sectors. How Beijing plays this will shape its ties with the UK and Europe for years. The British Steel saga is a double-edged sword. It's carving out a golden opportunity for India to shine as a trusted partner, while slashing China's reach in a sector it once saw as a gold mine. This isn't just about steel, it's about the future of global trade, where nations are rethinking the balance of commerce, security, and diplomacy in a rapidly changing world.